What assets do you think will perform better when the cycle is coming down again? So when liquidity is decreasing again?
I suppose it depends a lot on the nature of how quickly liquidity comes down and why it's coming down. But I would tend to think that you would expect at that stage that government bonds would perform well because they are still considered to be the safe asset in the system. So I think one's got to recognize that there may be a temporary window for performance of government bonds. And I'm cynical enough to suggest that at some stage, governments will want to push people out of risk assets back into the sovereign debt markets so they can improve their funding abilities. So, that must be the case at some stage. Cash is always a pretty good investment to have, but maybe, and I just raised this a point, maybe the world is getting wiser to what the central banks are doing. And they realize that if there is a fall in liquidity and there's a risk of financial crisis, that they know that central banks will come back in again. There'll be a Fed put, or whatever you like to call it, which will support the markets. And, that's a realistic statement. For the simple reason that we're living in a very fragile financial world of existing world where you've got existing, these big debts. You've got the existing structure of financial markets, which are very, very fragile because they're based on weak collateral and lots of leverage. And you need the central banks there to paper over the cracks all the time. But the more the central banks paper over the cracks, the more they pump in liquidity, the more monetary inflation you get, the higher the gold price goes and the higher Bitcoin goes.